Is there any way to figure out if exchanges actually are selling paper Bitcoin through these metrics, or is
No.
that something that so that's not even helpful in
No.
that
If
regard?
you look at the 2022 bear market, what created the savageness of that last 6 months? It was all the off-chain, all the hidden leverage that Celsius and Three Arrows and all these mobs actually had. There is no metric for this because the whole point of it is that it's clandestine leverage. So if they're doing all this paper Bitcoin, right? And I actually wrote a piece that I called Paper Bitcoin. It's actually one of my favorite pieces I wrote last year. And there's this narrative that derivatives are suppressing the Bitcoin price. And my take on it was, well, if you're a big asset manager and you want to allocate $1 billion to Bitcoin, if you can't hedge $1 billion worth of risk in a liquid options market or a liquid futures market, you can't buy the billion in the first place. So my case on paper Bitcoin is actually without derivatives and without big options markets, you can't have the big capital inflows to take us higher. You actually need the derivatives markets to get to 5, 6, $7 trillion market caps. That's just how it is. So that was my take on paper Bitcoin. Whether exchanges are short selling and all this kind of stuff, people moan about this all the time. Guys, we're crashing to $97,000. Where's the suppression? Right? We're basically at all-time high. The thing is, I should actually add this to my chopsolidation definition. It is also a period where the biggest narratives about short selling and manipulation, every man and his dog is banging on about this. No one talks about manipulation and short selling and all this stuff when the market's going down or when it's going up, only when it's going sideways and nowhere. Which, by the way, if you look at on a daily price action, Bitcoin goes nowhere, and by nowhere I mean less than 1% up or down, 40% of the time. 40% of the time, Bitcoin literally goes nowhere on a daily basis. The other 30% it goes up, and the other 30% it goes down. So if you're one of these short sellers, right, there's a 70% chance you're going to be wrong because 40% of the time it goes nowhere, you're wrong, and 30% of the time it goes up, you're wrong. So all this is why day traders get blown up all the time, but it's not manipulation, folks. We're a $2 trillion asset. It's going to take a lot of money to move to the next altitude. If we can't find that money, we go down to a lower altitude until we do. So this is just how markets work. Don't worry about boogeymen. You'll never catch them. And if you do catch them, what are you going to do about it? It doesn't change your world at all. Let it go, move on.
Just speaking of large numbers, because you touched on this briefly, but I know you wanted to talk about it a little bit, this kind of law of large numbers piece. You want to get into that in a little bit more detail, maybe?
Yeah, for sure. So I called it the law of large numbers, which is the whole idea of that concept is that things are basically mean reverting. When you run enough simulations, it goes back to some level. For that level, what is the gravity of Bitcoin? It's the realized cap. In my view, it is the money saved in Bitcoin on chain. If you go to an exchange and you just buy and you just leave your coins there, you're one button away from a sell. It's not really a capital inflow. When you buy and you take it into cold storage and you hodl that thing for 6 months, a year, 5 years, you have saved money in Bitcoin. So the realized cap, in my opinion, that is the metric. When people ask me, is Bitcoin being adopted? I show them the straight up chart of realized cap and say, look at all this money being saved in Bitcoin. It's up $480 billion in the last 2 years. That's how much money is going. Yes, it is being adopted. So my concept is, in order to go, we're at let's just say an $800 billion realized cap right now, and we're at 2 trillion. In order to get to a 2 trillion market cap, we needed $800 billion to go into the realized cap. The real number is 800 billion, and the multiplier is then whatever that is up to 2 trillion. In order for us to get to 3 trillion, you probably need the realized cap to go to 1 trillion or 1.2 trillion and add that extra capital flow to move higher. Where does those capital flows happen? During chopsolidation periods, during corrections, during times when the market goes nowhere and trades around and buyers and sellers are trying to work out what this thing is worth. People take profit that revalues their $10,000 Bitcoin to $100,000. Some other guy had to come in with $90,000 more than the original purchase price to acquire that same coin. Capital inflow. So that's the way I like to think about these things, right? It just takes time. We are in the world of big numbers. Bitcoin is, as we're talking about shitcoins, it is the biggest fish by not even contended with, the biggest fish in its pond. But it just swam out into the biggest pond in the world, which is the macro market. So whilst Bitcoin is $2 trillion, and it's going to take time and big money to go to the next level, gold added $6 trillion to its market cap last year alone. That's a 25% move, right? And I'd say most Bitcoiners would be very disappointed with a 25% bull market. That's what I mean. But 6 trillion just take gold's add, just the amount that it went up last year. Bitcoin's $350,000 a coin at that market cap, just the amount gold added. So we're in a world where Bitcoin is the smallest fish in the biggest pond, which is the opportunity set. But the opportunity set takes a long time to get there. And a lot of people, I don't want to bring it up actually, but the power law, a lot of people talk about the power law, which I don't give any time or effort to. One thing that a lot of people ignore about the power law is its log time as well. To go up orders of magnitude, you need orders of magnitude more time as well. And that part I actually do agree with.
It's I have not given too much attention to the power
Don't.
law. Well, you just saved me some potential time there. That's fantastic. Just building off that, another question we had was just about chopsolidation. And the question specifically was, is this the highest weekly choppiness index that we've ever seen? Like, are we at a period of extreme choppiness right now, or is this just kind of par for the course?
Yeah, no, so the reason that chopsolidation has its name, it actually comes from the only technical indicator I use, which is called the choppiness index. This Australian commodity trader invented it many years ago. And basically what it looks at is, I use a 10 window period for weeklies. And the idea is take the last 10 candles, and you can see the price is chopping around within that range. If all the candles are within a defined range, this thing will go very high. And the idea is it's basically saying it's like a fuel tank. We are ready to trend again. We've chopped around long enough that we're ready to go. And this thing works on daily and weekly and monthly timeframes. It doesn't tell you a direction. It just tells you, has the market chopped wood for long enough on that particular time frame? So yes, we've basically hit an all-time high. Now, again, I use a 10-week period for mine. The standard is 14. So all these things are variable. I use 10 because by my analysis, we roughly trend for about 10 weeks at a time, and then we chop around. So that was just kind of my base case there. But the market looks like it wants to go. It does want to move. Which direction it goes? Well, I've got my upside 150K scenario and I've got my downside 75K scenario. I've got to look at both of them because it could be both. It could be one. We don't know. It could be one and then the other. So we'll have to wait and see.
Do you think, and I won't hold you to a price prediction or anything, but is that 150K scenario, is that where you see like, as in that's as high as we're going this cycle? Like barring, like, does that include the potential of nation states just deciding to ape in, or is that's base case? Yeah, there may be some other, like all else being equal, that's kind of where you think we're going.
Yeah, so I think the way to think about this is in terms of, if we're just thinking about from like a probabilistic standpoint, the metrics that I've used to define that 150 zone, if we get to 150, only 5% of all those metrics trading history is at a higher level than that. So we've gone there. 5% is not zero. But it's also, there's a 95% chance that they're kind of overheated. So it's one of those things where check the analyst. Check the analyst looks at this thing and goes, for the foreseeable future, I can't tell where we're going to be in 10 years' time. For the foreseeable future, I think 150K is, everything will be overheated. And check the analyst just by, I cannot have an opinion that is otherwise, that is saying like, oh, suddenly all my models are broken. That's FOMO, right? That's me going, oh, I'm just going to ditch the models because my gut feel. So based on everything I look at, hodlers have put tops in at the amount of profit if we get to 150. Now, the other thing that's important to remember, these are moving targets. 150 was 149 and 148 a couple of weeks ago, because as demand comes in, as that realized cap climbs, the average cost basis lifts. I mentioned that there's 45% of all dollars invested above 90K. What happens if investors have just realized that this is now the floor and we get this period of reaccumulation that actually cools things off and raises this level, right? So the idea is that we're trying to look for when are we stretched away from the mean, right? Because you want to always go back towards that mean. That's what mean reversion is all about. I think the realized cap is an important mean reversion model. Unless we get that demand coming in, those models will just keep going higher and higher. But if we were to teleport tomorrow and I wake up and we're at 150, check the analyst. Simply has to put out a piece saying, guys, we're overheated beyond belief. There's a 5% chance or a 4% chance we're going to keep going. That's not zero. But if we keep going higher, the odds go from 4% to 2% to 0.5% to nothing. And then you're like, we're in rare air. And maybe it's a new cycle. Maybe this time is different. Maybe $1 million is just a magnet. But the other framework I've got, which I think is important, if we wake up tomorrow and we go to $1 million, I think most people listening to this can probably envision an 80% correction back to 200K. I can't envision an 80% correction from 100K. Back to 20K, good luck. So, the bull market authors the bear that follows. The more we just grind up and sideways, the higher those models keep going. So slow and steady is actually going to get us to a much, much better place, far more robust. Bear markets will be much more shallow. From 150, I don't think we go down 80%. I think we go down 40%, 50%, right? That's the kind of environment where it's just not going to be bad enough to justify going back down 80%. So that's how I think about things, and we'll just have to read it as it comes.
I suppose, especially if that environment coincides with a very high liquidity environment from the fiat system. That
Correct.
just seemed, it's going to be an interesting recipe. One of the other questions that we had, a slightly different take, was just about what you think about recent kind of very, very low fee environment. It's a great time to consolidate those UTXOs, but why do you think the on-chain activity is so particularly slow at this moment? Not a lot of competition for block space.
Yeah, I think there's two takes here. So the first one is that, strictly speaking, when fees go down like this and on-chain volumes go down like this in every single previous cycle, it has been the start of a bear market. That's just check the analyst's opinion. Is that it is you would rather people using Bitcoin than not. So first things first, strictly speaking, it's not great. We also have to temper this by saying we've probably had a low fee environment for some time. It's been all the shitcoin ordinals and all that kind of guff that's been going around, which has basically just died with all the other shitcoins. Because that's now disappeared, suddenly we're just looking at monetary transactions. I wrote a piece the other day where I think Runes was basically the number one, since the halving, has been like the number one block space user, basically went to zero almost overnight. That is why blocks have essentially emptied out. So now everyone's kind of left looking at this and going, well, where's all the demand? Where's all the, and it's still there, by the way, right? We still have, $15 billion a day of old money taking profit. Someone else is buying them. We're crashing to $97,000. So I'm not a bear, actually, but I am also prepared for, guys, this is not what you see during a rip-roaring bull market. So just be tempered, right? If we were to go back down to 75, if we were to go back down to 80, if we go back down to 90, these are the levels where I am certainly paying attention to, because again, check the analyst is saying, hey, it's not strictly good. Check the hodler lights up and goes, oh, that sounds like I'm going to have to empty my bank account soon. So therefore, I'm going to start thinking about that in advance so that when it happens, I don't go, shit, I just spent all my money at a high price. I'm like, there it is. Thank you very much.
Yeah, I mean, do you think also that there's the possibility of just inflows into the ETFs changing some of that volume in terms of on-chain? Like a lot of people who would have been lighting up your on-chain metrics for this, those are now more consolidated because they're with an ETF issuer and then with Coinbase.
Yes and no, because in order for the ETFs to be filled, you still need an OTC transaction and some guy to sell. And, if you think about it, $1 going into the ETF is not $1 worth of UTXOs moving around. There's multiple transactions for it to go into the exchange, get sold, move to the OTC, go to the authorized participant, then go into the custody. So there's like a sequence of money moving around. So what we're actually seeing is that there's just less activity. We've got less trade volume as well. That's also cooling off. So you just look at all, and that's why I say you look at what's going on in ETFs, what's going on in derivatives, what's going on in spot, on-chain, and you look at all of these things and they tell you the same story. We are substantially quieter today than we were at 100,000 when we first hit it. So there has been a cooling off. That doesn't mean the top is in. It might, but it doesn't mean the top is in. It just means that right now it's a softer patch than where it was. Therefore, I'm probably not expecting that we just teleport to $1 million tomorrow. So therefore, I kind of put that scenario as a low probability event and I start thinking about things through a more rational, well, until things start to pick up, I assume that I can be a bit more patient.
Does that trade volume get measured in BTC terms or dollar terms?
Usually it's in dollar. It's usually in the quote. So if you're trading shitcoin versus BTC, BTC is the quote currency. It will be in BTC. If you're doing Bitcoin versus dollar, it will usually be dollars.
Okay, that makes sense. So I want to be conscious of your time here, but I wanted to give a chance. Just you have a very rational way of looking at these things, and I think it's very useful because again, emotions can run high when price is going up and when price is going down, and seemingly even more so when price is chopsolidating.
Yes.
So just do you have any just general advice for folks on navigating this, especially maybe for newer folks who I'm pretty new myself. This is just like my first cycle that I've actually seen come through. So I'm new. There are people who are now just getting in the year 2025. We're minting new Bitcoiners. What advice do you have for people who are new to this, who are saying like, I don't even know how to deal with all this? How should they handle it? How should they think about this going forward?
Yeah, so I think the first thing is that most people come in and they think they're a trader. We all go through this experience. You end up at some point blowing up an account somewhere and you realize, I hate this trading thing. I hate this trading thing too. I don't like doing it. I don't think it's fun. I don't write about it. I don't care about it. You know, entry, stop losses. It's just a different, don't worry about it. So have that long-term perspective. I actually think that having a separation of you, the analyst, and you, the hodler, it may not be the analyst, but like you, the objective thinker. It's natural human behavior to take our expectations for what should happen. Trump's in power. They're talking about strategic reserves. Bhutan's buying. Why aren't we at $1 million yet? That's your expectation. Your expectation is not what is happening, right? And it's very easy for people to apply their expectation to the price chart. The way this manifests is you take big information, like Trump's going to get in and we're going to win all this, you know, it's all going to be fantastic. And then applying it to the next daily candle, right? And when it doesn't happen, you feel like something is wrong and you keep trying to justify why the price is doing it. And then you go, oh, it's manipulation. That's why my expectations aren't happening. No, your expectations were incorrect, right? So don't allow your expectations to get in the way of what the market is actually doing. Markets are just information. That's all they are. They're just information. The only thing you can control is your decisions. So make your decisions before they happen, so that even if that scenario doesn't play out, you have made your decision in case it does. And if you just think about it from that perspective, it just improves the whole process. You are here for the long term. You don't have to be a trader. In fact, I recommend most people don't trade because it's a huge waste of your brain power. You probably won't win. The statistics show you probably won't win. Most people should not trade. But that doesn't mean that understanding what Bitcoin is doing isn't useful. So that's why I think on-chain data, a lot of people are like, oh, I don't want to trade. I'm not a trader. I don't trade either. But I study this thing because it helps me understand what my life savings are doing every single day. And if you're on Bitcoin Twitter or you're on Bitcoin Nostr or you're listening to podcasts every day, if you're spending more, if you're checking the price chart twice a day, add in some extra information because it tells you the health of your asset. And a lot of this stuff isn't actually that complicated, right? There's like 5 metrics that really matter. There's obviously a skill in learning how to actually properly interpret them. But, you know, when people are in profit, they take them. It's not that hard, right? That's just kind of the framework. When people who buy high, they always sell low. To me, that's the whole point of this game.